Hi, I'm Paul Heydweiller, one of the junior editors of the Cornell Real Estate Review, here with Gary Phillips from Allianz Real Estate of America. Appreciate you being here, Gary.
My pleasure.
Just wanted to ask you a couple questions following up on your panel discussion on investment trends. You talked a little bit about Allianz investing into some different markets at this point, pushing your allocation into the U.S. in particular, as well as some additional investments in Asia. Could you speak a little bit about some of the difficulties investing into the Asian market that you discussed?
Sure. So my level of expertise is more on the Americas. However, in Asia, we've had trouble over the years given there's obviously some government risk in that part of the world. Yields are extraordinarily low. There's a vast local institutional world that controls much of the real estate, so it's tough to get our hands on it.
And then, so as far as diversifying your investments internationally, you mentioned pushing a lot of your funds into the U.S. In terms of property types and also kind of core versus value add, how do you look at the U.S. market compared to the Eurozone?
So we think obviously it's very attractive relative to the Eurozone. We can acquire assets at the same or better yields, but with greater demographic profiles in the markets here, and better prospects for growth going forward. In terms of asset classes, we're pretty diversified. We're trying to be pretty diversified. We're a little office and multifamily heavy right now. We've been adding retail and logistics to the portfolio, and we're trying to diversify geographically within the U.S. as well. Our investors in Europe view the U.S. as diversification alone, given the size of the portfolio there. But here locally, we want to try and build a diversified portfolio both by asset class and by market.
Are there any specific asset classes that you view as more attractive in the U.S. as compared to the Eurozone?
Office kind of behaves the same way in both markets. Multifamily is a completely different animal, and retail as well. They're almost not comparable in terms of the dynamics. Both the way that they're constructed in terms of 250 to 400 unit type properties with shared amenities and things like that. We don't really have that in Germany. And then retail is obviously a completely different profile as well. But the most comparable is really office, and I would say that they behave the same way. The only thing that we have going for us here in the U.S. is that we have better prospects for rental growth going forward.
Great. Thank you so much for being with us, Gary.
Yeah, my pleasure.